Guys, today we'll be doing a little small analysis to let you guys know how the week has went. So we're still on our $10 challenge. So as you can see, we've been following our compound plan. We're at day 28 on the compound plan. We're right on schedule. We're right on track. We've completely destroyed the first page. Moving on to the second page, and as you can, mm-hmm. That's fine. Yeah. So yeah, sorry about that, guys. As you can see, it's just a little patience. Keep going, keep going. We're trying to get here. But yeah, we've had a good week last week. Let's just see how we did. We had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So we had 10 wins last week, and we had 1, 2, 3, 4. We had 4 losses. So last week we had 10 wins and 4 losses, which is still a good week. We hit 5% every day, so we still made our 25% last week. There's something new I'm trying to incorporate in when I'm looking at trades. I'm trying to do the top-down analysis. I realize I don't do it much, and it's something that I'm really working on. As in, when I say top-down analysis, I'm speaking from starting from the 15 minutes, go straight back down to the 1 minute chart. And there are some weeks where I realize that when I do the top-down analysis, it makes me have like a clearer move. I understand the move better. Say, for example, if we're on the 15 minute now, and we can see that this is a gigantic sell-off, we're in a downtrend. So if we pay attention to these candles, we can mark our support and resistance here from this candle right here. We know that we're looking for sales because it's below the 200 EMA. So if I mark it on the 15, I can move down to, say, the M1. See where that line is? No, that's the line that we are looking for. But if you look on the 1 minute chart, you realize that they're in an uptrend, which really and truly you are in an uptrend on the 1 minute, but on the 15 minutes you're in a downtrend. So you know that the market is gonna go up to hit this point and then make its way back down. So that's what we're really looking at. And that's how you do the top down analysis. So even though I know it sometimes gets confusing, because as I said, if you look at the M15, we're in a downtrend because we're below the 200 EMA, right? So we know that the overall movement is down. So we're really looking for sales on the 1 minute. So if you go back to the 1 minute now, the 1 minute is in an uptrend. Why? Because it's looking for that area of resistance. So what I will be doing on the 1 minute is I would just zoom out, and I'll be looking for that line. So I know that this chart, this candle is gonna come all the way up to here, and then it retraces. So that's what I will be looking for. Yeah, so that's just how I do it in terms of top-down analysis. Or sometimes I will just stick to the 1 minute and just mark up support and resistance based off the 1 minute. I don't have another line in my charts. Oh, I didn't get to explain a lot of stuff in terms of my indicators, and I realized it's a very bad habit I have. And when I start, I don't tell you about my indicators first and the settings of my indicators. Moving averages, 200 moving averages in the standard trend line. This tells you if the market is in an uptrend or a downtrend. If it's above 200 EMA, it's in an uptrend. If it's below the 200 EMA, it's in a downtrend. So that's the first sign. I use the 8 period moving average because what I realize is that price bounces a lot off the 8 and the 50 EMA. So the 8 EMA is this line right here. So if you're looking for sell and you're looking for buys, if you realize the candles, they bounce off the 8 EMA. If you're looking for sell, they bounce off the 8 EMA. So that's what I really look after. Look for. The zigzag tells us, like, it tells us when the market is looking to change directions. Say for example, the zigzag is formed here, but of course you have to look at the market condition as well. The zigzag formed, that means that the market is going to push down. Or if the zigzag is going up, that means the market is going down. If the zigzag is going down, that means the market is going up. And that's just a rule that you have to remember. And the settings are as followed. 5, 12, and 3. Now, let's just see if my what I anticipated plays out. Because remember I was telling that I mark up basic support and resistance, and I told that the market is gonna push up here to this line. So I'm expecting now, once we push to here, if the candle close below this, it's gonna take a reverse and just head back down to the downside. So we have 14 seconds. You see it made a touch right there. Let's go and have a look. Well, we closed above. It closed above. Let's look at the 15 minutes because I know it's gonna reverse. Yeah. It's gonna reverse. Yeah, as I said, it's gonna reverse. As you see, the zigzag formed on the 15 minute means that the market is now looking to push back down. Now there's something that I should say. If the market doesn't push off the 8 EMA, it typically pushes off the 50. And this is just something that I personally look at. Like, the 50 EMA is so important. For me, it tells me when a trend has been broken. Alright? See, did exactly what I said. Came all the way up here and it's looking to reverse now. It's gonna get a gigantic red candle. It's gonna close below and you're gonna get a red candle. We'll get back to this shortly. But the 50 EMA I think is the most important EMA for me, and it's in white because I think it tells you when the trend has ended and they're looking for a different direction. Say for example, we've been in a downtrend, right? We've been in a downtrend, right? This is a downtrend on the 50 on the 15 minute chart, right? This is a downtrend. However, the market is kind of moving sideways. What I look for is that the 50 now, this is what it does. The 200 says it's a downtrend. The 50 tells me if it's going to continue being a downtrend or it's going to work its way up. So I would normally wait. If the candle pushes up to here and closes below here, I know that the trend is going to continue down. However, if the candle finishes above here, closes above here, I know that it's going to continue and push up, and it's now changing from a downtrend to a uptrend. So that's what my 50 EMA does for me. It tells me when the trend has changed from a down to a up, or up to a down. Now the Keltner channel is like Bollinger Bands, and the settings for that is 20, 10, and 2, and it kind of tells you how far price is from the average price. Say for example, we know that if it's too much out here, it's gonna reverse. If it's too much up here, it's gonna reverse. Or if it's just traveling in and out. I like to take it when it's out in these areas. So just a combination of everything here gives me my strategy. Now I'm gonna move back to the M1 to show you guys what I say is Fox. You see? And this is how you take your trades. I marked this up on the 50. You guys were watching. I marked this up on the 15 minute. Right? And what did I say it was gonna do? Once it hits this line and it closes below this line, it's gonna reverse, because what? We're in a downtrend. Look at the 15. it's pulling back, pulling all the way back. Go up to the 1 minute. We marked up this line from the 15, and this is just how you take great trades, guys. Like, this is how you take great trades. Like, you mark up your support, you mark up your resistance on your higher time frames, and you just look for where it's gonna touch on the lower time frame. 3 minutes, we would have been in and out, because we would have took this candle here, 1, 2, 3. You would have won this by a landslide. And that's just it for me today. Also, if we're doing market patterns, there's this guy. When I was on the IM Academy, they called him Mr. Teacup. I think his name was Lazaro Tavares. He showed us something about this pattern. I'm not sure if I can do it. Where can I find this? I don't know. I'm gonna have to play around this a little bit more. However, it's basically a teacup. It will come down here, come up here, gives you this handle, and then shoots up all the way up again. It's called a teacup pattern. But it has to be there are certain conditions that has to be met. Like, it has to be an engulfing. Alright? Now, this is the handle, and it's gonna go all the way back up here. So you gotta pay attention to market patterns as well. As I said, guys, it's just a mixture of different things you have to pay attention to. Because, as you can see, this was a teacup. This is the cup. This is the handle. And then it's gonna go all the way back up. Alright, and that's gonna be it for our video. Hope you guys found this informational. Remember to like, share, and subscribe, and we're gonna be out of here.